Welcome back to Real Stories. I'm your host, and today we're diving into something that could genuinely change the game for homeowners across the country. We've got Buddy Blake here, and Buddy, we're talking about a potential shift in capital gains taxes on home sales. This is big stuff, but before we get into the weeds, help me understand. Why should someone listening right now actually care about this?
Great question. So here's the thing. Most homeowners have no idea how much money they could save when they sell their home or how a change in the tax code could literally affect their retirement plans. Right now, if you're single, you can exclude $250,000 in capital gains when you sell your primary residence. If you're married, it's $500,000. But there's legislation being considered that would double those numbers. We're talking $500,000 for singles and $1 million for married couples. And look, that might sound like it only affects rich people, but I've been doing this for 30 years and I'm telling you, it affects way more people than you think.
Okay, so let me make sure I'm tracking this correctly. You're saying there's proposed legislation. This isn't law yet, right? Because I want to be really clear on that distinction.
Exactly right. This is crucial. Congress has been looking at housing reform packages, and capital gains exclusion increases are part of the conversation. But I want to be very clear, this is not yet law. It's proposed legislation. Some bills have been introduced, but we're not at the point where this has been signed into law. So anyone listening should understand right now, the current law is $250,000 for singles, $500,000 for married couples. That's what we're working with today. The doubling, that's what we're hoping for, but it's not a done
I
deal.
appreciate that clarity. So let's talk real numbers here. Give me an example of what this actually means for someone. Like, let's say a couple in Wilmington, North Carolina. They bought a house 25 years ago for $200,000, and now it's worth $700,000. Walk me through what happens under current law versus what could happen if this legislation passes.
Perfect example. So they bought it 200,000, it's now 700,000. That's a $500,000 gain. Under current law, they're married filing jointly, so they can exclude $500,000 of that gain. That means they'd owe capital gains tax on $0. They walk away clean. But here's where it gets interesting. What if that same house is worth $800,000 instead? Now they have a $600,000 gain. Under current law, they exclude $500,000, so they're taxed on $100,000. Depending on their income bracket, that could be $15,000 to $20,000 in federal taxes. But if this legislation passes and they can exclude $1 million, they're still walking away tax-free because their gain is only $600,000. See the difference? It's not just about wealthy people. It's about long-term homeowners who've built real equity.
Oh, wow. So it's actually protecting people who've lived in their homes for decades and watched them appreciate naturally. That's not a wealthy person thing. That's just normal home ownership. So what's the bigger picture here? Why is Congress even considering this?
So there are a few things happening at once. One, we've got a housing supply crisis. Inventory is tight. And there's something called the lock-in effect, where homeowners who bought years ago at lower prices don't want to sell because they'll face a big capital gains hit. They're locked in. If we increase the exclusion, we might unlock some of those homes back onto the market. More inventory could help with affordability. Two, we're seeing a lot of baby boomers and empty nesters who want to downsize or relocate, but the tax hit is keeping them from moving. You increase the exclusion, and suddenly a retiree in Wilmington might feel comfortable selling their $800,000 home and moving to something smaller. That frees up homes for families. Three, it's good policy for people who've done the right thing, stayed in their homes, built equity, paid their mortgages. It rewards that behavior.
That actually makes a lot of sense. So let's address something I think people are confused about. I've seen comments online saying, oh, this bill already passed, or everyone's getting $1 million tax break. What's the reality check here?
Yeah, so myth number one, this is already law. It's not. It's being discussed, bills have been introduced, but it hasn't passed both chambers and been signed into law. So if you're selling your house next month, you're still working with the current $250,000 or $500,000 exclusion. Myth number 2, everyone gets $1 million tax break. Not quite. First, you only benefit if you actually have a capital gain. If you bought your house for $400,000 and sell it for $410,000, you've got a $10,000 gain, and you're not paying tax on it anyway. You're way under the exclusion. Second, this only applies to your primary residence. If you're selling a rental property or a second home, this doesn't help you. And third, there are income limits and other rules. This isn't a blank check. Myth number 3, this will crash home prices. Actually, the opposite is more likely. More inventory typically helps stabilize prices, and it could help with affordability by increasing supply.
Okay, so I want to zoom out for a second. You've been in real estate for 3 decades. How do you think this plays out in markets like Wilmington, North Carolina, or coastal North Carolina more broadly? Because those are retirement and vacation home markets, right?
Oh, this is huge for coastal markets. Wilmington, Brunswick County, Pender County, these are places where you've got a lot of retirees who bought oceanfront or near oceanfront homes 20, 30 years ago when they were way cheaper. Now those properties are worth $1 million, $2 million, sometimes more. The capital gains hit is enormous. A lot of these folks want to downsize, move closer to family, or just simplify their lives, but the tax bill keeps them from doing it. You increase the exclusion to $1 million for married couples, and suddenly a retired couple can sell their $1.2 million beach house, pay 0 federal capital gains tax, and move to something more manageable. That opens up inventory in the luxury coastal market, which has been tight. It also helps vacation homeowners. If you bought a second home in Carolina Beach or Wrightsville Beach 15 years ago, this could matter to you too. And for builders and developers, more inventory means more opportunities. You're not fighting against the lock-in effect as much.
That's a really good point. So let me ask you this. What should people actually be doing right now while this is still being debated? Like if I'm a homeowner, what's my move?
So first, don't make major decisions based on legislation that hasn't passed yet. That's rule number 1. But here's what I do. Have a conversation with a good tax professional about your specific situation. Know your cost basis, know your potential gain, understand where you stand under current law. If you're thinking about selling in the next year or two, understand the tax implications now. Don't be surprised later. Second, if you're a realtor or you work in real estate, start educating your clients about this. Help them understand that things might change, but also that they shouldn't wait around hoping for a law that might not pass. Third, if you're a long-term homeowner thinking about selling, don't let tax anxiety paralyze you. Talk to a professional. You might owe less than you think. And fourth, if you're a buyer, understand that if this passes, it could unlock more inventory over time, which might affect pricing and market conditions. Stay informed, but don't panic.
I like that practical approach. So let's say this does pass in the next 6 to 12 months. What happens then? How quickly do we see market impact?
Good question. It won't be overnight, but I think we'd start seeing movement pretty quickly. You'd probably see an uptick in listings within a few months, especially from older homeowners and retirees who've been sitting on the fence. That increased inventory would help cool some of the hot markets and ease affordability pressure. You might see some shift in pricing, but I don't think it's going to be dramatic. It's more about unlocking supply that's already there. Mortgage lenders would adapt, title companies, closing attorneys, everyone in the ecosystem adjusts. For realtors, it could be a really positive thing. More homes on the market means more business. For buyers, especially first-time buyers and move-up buyers, more inventory is generally good news. It gives you more choices and potentially better pricing. For investors, it's neutral to slightly positive. It doesn't directly affect investment properties, but more housing supply helps the overall market.
Buddy, this has been really helpful. I think people are going to feel a lot more informed after this. But before we wrap up, What's the one thing you want people to take away from this conversation?
Here's what I want people to understand. Whether this legislation passes or not, you're not helpless. If you're a homeowner, you likely have more favorable tax treatment on your home sale than you think. If you're thinking about selling, talk to a professional. Don't let fear or confusion keep you from making the right decision for your life. And if you're a buyer, stay patient and stay informed. Market conditions change, inventory fluctuates, and opportunities come around. This potential change in capital gains exclusion is one more piece of the puzzle, but it's not the whole picture. Make decisions based on your life, your goals, and your timeline, not on speculation about legislation. That's the real story here.
That's solid advice. Buddy Blake, thanks so much for breaking this down for us. Really appreciate the clarity and the practical perspective. And for everyone listening, if you want to learn more about how this could affect your specific situation, reach out to Buddy or a qualified tax professional in your area. Thanks for tuning in to Real Stories.